It is Friday, January 26th. Wanted to get out a market update for you guys. We'll start getting back to some of these for those of you that want them. Right now, interest rates are getting a little bit, well, they got a little bit better yesterday, but they're getting a little worse today. A lot of different things going on, of course. Since October 26th, interest rates have continually kind of gotten better until the end of December, and then they kind of flatlined and got a little bit worse since the end of December. We're seeing a lot of margins move around, and that's why you'll see, some big changes in an interest rate or the cost on a loan when you're looking at a loan estimate or a CD. In general, interest rates are better than they were last year, of course. We are seeing interest rates down without buying down discount points and everything, and depending on credit scores and all that, low sevens. You can get into the sixes, of course, mid sixes. Whether somebody should or shouldn't pay for discount points right now to get into the sixes, well, that's going to be up to them. They're going to have to look at the numbers, consider all their options. But interest rates are better. We're not typically seeing those 8% interest rates anymore. So things are getting better. They're going to continue to get better. Nothing moves in a straight line, so they're just not going to come down continuously. They are going to come down and then go back up a little bit and then come down. Again, a couple of dates we're looking at this year is going to be March 20th, and then of course, April 30th, May 1st. Where we're going to be looking to see what the Federal Reserve is going to do, what they're going to say. There's some interesting reports and some conversations that have been going on about if the Fed needed to do all of what they did. If inflation was in fact transitory, it looks like interest rates are responding to that, of course, where the inflation is coming down still and the economy is still going well. We just got good GDP numbers showing the economy is still moving. And so now there's conversation of, did the Fed do the right thing? We knew that was coming. We'll have to see how they respond. We don't think it's going to be like a quick turnaround the opposite direction, but it will start to get better even from where we're at now. We've already seen some of that. Some of that's already baked in a little bit, but we are expecting interest rates to continue to come down. We're a little bit flatlined right now, and they'll move. They could move an eighth or a quarter or so, in the next week or two. In either direction, we're at a point where we're getting squeezed a little bit. So that's what we've got going on right now with interest rates. Again, they're still doing pretty well. They're better than they were. So if you have anybody who's on the fence right now, obviously, I think you know that the conversation is going to be what's going to happen here in a couple of months into the summer, where people start coming back into the market, and then you have 15 or 20 buyers trying to get the same house, because we're not going to get this huge influx of inventory that's just going to solve all those problems. So we do have those conversations. We still need to get out to your buyers. If you have any questions on the market, interest rates, numbers, payments, anything like that, let us know. We'll always be happy to do like a mortgage coach for you or your clients, or rent versus own comparison or calculation for them, just so that they can see the numbers. And if you have any questions at all, feel free to give us a call. You can call me on my cell phone right now. We're transitioning software for our team phone number and everything, just in case there's some issues there. Give me a call, 214-289-5562 if you have any questions or need anything. Hope you guys are having had a great week, and enjoy your weekend. We'll talk to you again next week, okay? Bye.